All right, good morning, everyone. Happy Wednesday. Hope you all are doing well. Let's take a look and see what's going on with Bitcoin. So, from yesterday, I've been kind of posting about this, but getting rejected off of 64,410, that's going to be now our line of resistance, right? And we're coming down to 63,372. There is, from last time I checked, there's quite a decent amount of liquidity right here. So, there's a chance that we potentially do at least a small bounce from there. I'm not sure if we're going to get it back above 64,410, but it wouldn't surprise me if, they start trying to chop around within this range more. Um, I don't believe, and I'm still of the mindset that we're not going to get back to weekly open. I know that I posted, I think late last night, that there was a decent case for the Bears, or sorry, for the Bulls, if we could get, back up above 64,410, and we did hover above there for a while, but we just couldn't hold it. So obviously, the next line of support is going to be at 63,372. Taking a look at the 12 hour, now you're below the 21 MA, and it looks like you're probably going to close below it. I mean, we have another almost 9 hours left, but that's obviously a very bearish sign, right? Is closing below that level. The only thing that really is kind of holding up the bullish case for right now is the fact that you're in a cup and handle type of formation here. So we could potentially get a bounce or at least hold the 63,372, chop around for a bit, invoking more shorts, and then rip back up. I don't believe that it's going to happen this week. We could get back above maybe this support level right here, but I still don't think that we're going to get back, above at least these yellow lines up here, like especially 65,705. That would be our entry back into the value area low of that range that we had above. Um, I think we tested it enough, and I did want to go over that today, like why I put so much weight on weekly opens, right? I was going to go over that, and I was also going to go over, why it's a dangerous idea to put your stop loss below, right below double bottoms and right above double tops. Okay, so we're going to go over that a little bit here before we move into liquidity. Um, Taking a look at the 8 hour. So last night when this closed, like this is what I was looking to see if we were gonna get like a swing low right here, which obviously we've broken it by now. But you can see how there was a potential that we were gonna stay above that 64,410, maybe chop around, get a little bit more of a bullish case, a little bit more bullish consolidation, which didn't happen. Okay. Um, so this is kind of like this line right here is kind of our last support for the week before we really drop down low here to 62,146 and then down to 61,709 right here. Taking a look at the 4 hour now. So the 4 hour got rejected off of the 50. So this red line is the 50 MA. I believe, let's see, this purple line, I want to say is it the 80, I want to say? Yeah, it's the 80. So the 80, it's about ready to test the 80 on the 4 hour. So not that great of a sign, right? We had some consolidation here, fell through. Consolidation kind of the same way, fell through. Um, but let's go ahead and go into the 1 hour now, and then we're going to start doing some of that testing of the weekly open. So, um, looking at the 1 hour, you kind of have this head and shoulders pattern. It's really not looking the best, right? Um, this could take you down even further. I'm gonna measure from this neckline right here. So that, I mean, I don't know if we're already starting it, maybe right about there. But even if I started it down here, it starts getting you into that closer to that 62,146 area if we can't hold this line right here. So that's kind of where we're at. We did get a death cross, which is when the 21 MA crosses the 200 to the downside. So the 21's pointing down, crossing the 200. And obviously, if I were to flip this upside down, I would trade this bullishly, right? You trade this bullishly because it looks like a bullish pattern. It looks like your cup and handle, and then it broke out, right? So I do like to do that every once in a while to see kind of flip my perspectives, see how I would trade that on the opposite direction. Um, so let's go ahead and take a look and see like, the whole double top, double bottom concept. So a lot of times, when it comes to trading, they're going to tell you, if you read books about trading or if you study trading online from a retail trader perspective, you hear a lot that, oh, put your stop right at the wick, right, of this of a double top, or right at the wick of a double bottom, right? Um, so the reason why that doesn't work is because the market, at least for Bitcoin, and I'm sure it's for other markets, but they tend to just want to run them out, and then reverse in your direction. So a prime example of that is what happened on Tuesday here. So Tuesday we kind of had this double top right here, okay, and even you could call it kind of a triple top. Um, and I know that there was probably a lot of people that put their stop losses right here at 66,234. So when we had our, FOMC meeting, the following day, what happens is we dump, we come back up, we literally, poke above that, right? I mean, you can see it just wrecks this double top by a few $100s, not even that by that much, and then it runs in your direction, right? I mean, it just does that. It doesn't even have continuation. It has the next candle for the hourly is a little bit of a continuation, but then it just falls, right? Um, so, that's an example of why, like, if you were to put, if you were to short this, right, the smart move, if you're going to write this down, let's say, would be to at least be protected by some sort of a support or a resistance level. Like putting it above, even if you were to put it above this yellow line right here, which is our kind of our resistance level, you can see that you would have been protected, right? And like you could have still gotten, I don't know if you would have ridden this down all the way, you would have gotten still a 7 to 1. You could have gone like even right here would have been great, like a 5 to 1. You wouldn't even have had to suffer from this, but if you really wanted to do like a weekly move on this, right? I mean, this would have been a really good setup for you as long as you had, your stop loss above this resistance line. Now, I'm not a financial advisor, but, I'm just trying to tell you, that's common sense is that you should probably put, your stop loss above a place where, this wouldn't happen, right? Now, this week is a little bit different because this had a double top right here, and there's really no stopping it. I mean, you were just offside basically. When if you were to put your stop loss more above, this would have wrecked you no matter what, right? Um, but even even like this double top, I mean, there were a lot of double tops that just got destroyed. Now, when it comes to, a bullish case scenario, right? Um, you can kind of see like, for example, this was our double bottom right here. And, if you were bullish for the week, you could have put your stop, right at these wicks, and you did get a little bit of a move, right? But it came and it just destroyed it, right? So this was another case where, basically the double tops and double bottoms get ran out anyway, but the point I'm trying to make here is that if you're know that you're on side, right? Like if there's a good chance that like we're trading above weekly open right here and you're going to be on side for a move downward, and we're going to go into that in a minute. But if you know you're on side, the smart thing to do is to not put a stop right here. To put it up higher, right? So like I was saying, like even if you traded from this candle body right here, putting it above that yellow line and then putting this down, I mean, now you're even more to like a 4 to 1 if you didn't get a perfect entry, right? If you traded down even to this green line right here, it's still a 4 to 1. So just kind of keep that in mind, guys. Like I said, it's there's a reason why they teach you to put your stop loss here is because they're expecting that's where your stop is, and they're gonna go on wreck it before heading your direction, right? So let's get into more of the weeks and why we treat weekly opens so with such importance. Okay, so let's go ahead and kind of back test that a little bit. So when it comes to weekly opens, um, let's take a look and see even for this week. So I've been telling you guys this whole week that, we opened right here, okay, like right here at the 65,705 level, okay? Now, we traded a little bit below it. We came back up, right? And we were trading above it for 2 days, okay? And this is where I get wary, okay? Because we did not drop below that weekly open really at all. Tuesday we did a slight drop, and if we're in an extremely bullish environment, if you backtest us, you'll notice that this could be enough, right? And this could have just taken off, but the macro environment that we're in is still bearish. So what happened was, we basically created the top wick of the week on Monday, right? We don't want to see the high on Monday. We want to see the low on Monday. And I'll show you another example where there's a bullish week and why we want to see the low on Monday. But because we created the high on Monday, the chance is that we're probably going to be creating the low the rest of the week. Especially since we were hovering around weekly open, we're testing it multiple times as a support level. I mean, look at this on Tuesday to Wednesday, right? Just total chop on the hourly, testing it as a support level. And then finally, Wednesday morning, early hours, like we literally fall through it, right? And then we come back up Wednesday for FOMC and test it again, right? We get above it, we get this huge wick to the upside, taking out this double top, and then we test it again. And then we come all the way back down, and now we're just trading way below it. So, in my opinion, and if you back test this from weekly open, because we hung around it, we traded above it, we even retested it in the middle of the week on Wednesday, the chances is that we're not going to get back up there. Now, does that mean that we're going to just free fall the rest of the week? Not necessarily. What it means is that we could potentially bounce from we can make our even our low today, but it doesn't mean that we're going to get back up to it by Sunday, right? So I'm saying that like we make our low for today. I mean, you can see this is now treating this as support. It wiped out that double bottom right there, right? And so if you're trying to get like, the absolute bottom of the bear market, I mean, this is what's happening to people, right? You have, let's say that you trade this, you put, oops, wrong tool. You put your stop, right below your wicks. Let's say if you even took this, right? And you put your stop, oh, I'm going to put my stop right here on my wicks right here. I mean, you can see that like you could have easily taken profit, but some people they want to try to hold and see if they get the bottom of the market and they get wrecked, right? Their double bottom was ran out just now. So that people that hold long term like that, and they usually will get wrecked, especially in this market because it's a lot of chop. None of us are sure when the bear market's going to end, right? So it's a very in and out type of environment right now. It's very difficult to hold daily, weekly trades unless like you have a trading style where you're allowing for a deep stop loss and you know that probability wise that you're probably going to be safe. It's unless you're trading bigger time frames and with a huge stop loss like I said, and you know that you're on side, it's going to be very difficult to hold on to trades and make money that way. Just the environment that we're in right now. So when it comes to weekly open, let's take a look at this one right here, last week's. Okay, this is your bullish week. So look what happens. We have Sunday, Monday we come up. But that being said, let's see where our weekly open is. So our weekly open, let's see, this would have been my open is at 63,099. So 63,099. Let's take a look. So that's right around here. Yeah, let's put a line right there. Okay, so let's test this out. 63,099. Okay, so for this week, this is the past week, this is last week, we trade above it Sunday to Monday. Monday, we make our little top right here and we start trading below it. Look at how Monday, we start immediately almost trading below it, right? So even, by the end of Monday, we are trading below it. Tuesday, we test it again as support. We trade below it. And now by Tuesday, we are, this is what you want to see for a bullish profile. You want to see by like Tuesday, we could be making the bottom for the week, right? And you can see that Tuesday, Wednesday time frame, Wednesday barely took it out, made some bullish div right here probably, but you can see we made our bottom of the week Tuesday, Wednesday, the exact opposite of what we did on this week, right? Tuesday we were still above this weekly open. Wednesday we're above it still again, right? So the exact literal opposite of what we did on on this week, right, or during this week. Um, so you can see, we do Tuesday, Wednesday, and then we start just slowly grinding our way up Thursday, Friday, and we close higher. So this was a bullish week. This week was an exception. Like this week literally gave you no opportunity to test weekly open. I mean, This right here, 73,731 was our open. So 73,731. So you would have had to go in with the mindset that, Sunday basically would make your high of the whole entire week. These are rare occurrences. Usually, right, usually, when when it comes to weekly opens, you're going to come back and retest it. This just fell straight through and didn't come back. Okay, so this is a very rare bearish occurrence. You will find very rare bullish or bearish occurrences. Let's test one more week. So taking a look at this one, right? All right, Monday, right? We get above. Let's see, where's weekly open at? Weekly open, and by the way, we also pumped into it on Monday. So weekly open 76,978. So this is about 3 weeks ago. 76,978. Let's put it about right there. Okay. All right. So Monday, Sunday to Monday, we're just trading right above it. We didn't even make a wick. All right, which is already not a good sign. So Sunday and Monday, we're just trading above it, having fun. We have our double top right here. Come Monday afternoon, Monday evening, we drop below it. And then you can see on Tuesday, right, we're literally wrecking the double top again, with this wick, right? And if you knew that we had a bearish week because we barely created any wick to the downside, you would have been on side. You could have traded, this and had your stop, way up here. You could have entered on this candle right here, and then basically wrote it down for the whole entire week, including the following week because it was extremely bearish, right? Um, so you can see here that we did kind of bottom out on Friday. That is the norm if we're having a bearish week, Thursday to Friday. So we did bottom out on Friday, but this is kind of what I'm expecting for this week is that there's not much of an opportunity to come back up to weekly open. You can see we're just chopping around, chopping around, chopping around. Maybe we fall through next week, maybe we don't. Maybe we come back, make some sort of a bottom here, and then start working our way up next week. Um, Either way, you can see kind of how bullish and bearish profiles work during the week. For a bullish profile, you want to see Monday, Tuesday dumping. You do not want to see it acting strongly above weekly open. This is not, to me, that bullish above weekly open. We're barely trading above it by $600-700. I just don't. This is not bullish. Okay, like this is starting off the week with a dump, and then we're slowly working our way back up and entering a more of a bullish environment by the end of the week, Thursday, Friday, Saturday, Sunday, right? Um, so that's what you want to see. Okay, now bearish week, you do the opposite, which this is the opposite. You're, going above weekly open quite a bit. You're pumping up about almost $2,000 from weekly open, and then you're skyrocketing even above that. You want to see pumps at the beginning of the week for a bearish week. So that's kind of the point I'm trying to prove. Monday, Tuesday, you want to see a dump at the beginning of the week for a bullish week, and then Monday, Tuesday for a bearish week should be a pump, right? Like what this did. Hopefully that made sense to you guys. Let's go ahead. I know I spent quite a bit of time there, but let's go ahead and get it more into liquidity here, okay? So when it comes to liquidity, let's take a look at our daily. Um, so it looks like, let's see here. All right, it looks like we're starting to, really create like more of a bearish scenario. I mean, this is looking more of an opportunity down here, this yellow area, obviously, than coming up here. I mean, you don't have still, you don't have a lot of concentrated short liquidity up here, surprisingly enough. You have some, if you zoom in, you have some at 69, that we've been targeting for a while, but you just don't have, the concentrated liquidity that you need to really drive yourself up, back up here to the 80, even to up to 85 to take out this red area. So for right now, we have to assume that the month is still going to be bearish and it's going to stay bearish until proven otherwise, okay? So this is just showing more of a bearish case scenario, like, you can see it's a bear flag, right, breaking down, you have this kind of bear flag formation, and then it just takes that measure move and it's just going to come down, right? Not that we're going to go all the way down here this month, but you have to just be prepared for that. The 4 hour, so the 4 hour, taking a look at this, you can see that we have taken out this small pool of liquidity right here, which is right around my 63.3 area, okay? Next area was like 62, 180, I think it was. I'll pull up my trading view again. 62 146. 62 146 is our next area, so that puts us right about here, I want to say. Um, yeah, so 62 146 is right around here, taking a little bit of that liquidity. There is a chance that, this bottoms out for the week. We just kind of chop around like I mentioned because we took that 25x right there, but we could still keep falling through potentially even through today, come tomorrow. Um, yeah, 10x, nothing really down below. It's mainly going to be the 25x that we're going to be concentrating on for now. We're going to show the simple map as well, just to see kind of, from a graph perspective where everything is at. Um, you know, the 1 hour you can see we took out all of this block of 100x. We can still move down potentially further to that 62 one area at least, taking more out, right? Um, but it could stop here potentially. We don't know yet. There is quite a bit more concentrated 50x liquidity down below us, so it doesn't necessarily have to. It's not showing, I will say it's not showing a lot of strength off of this area, which I was hoping it would. At 63.3, we're still kind of falling through it, so that does tell me that we're definitely more in a bearish environment still. Um, Looking at the 15 now, you're not really getting a strong bounce from there, right? So we're right at that level now. You're not getting a strong bounce. There's a good chance that you're going to fall through to 62, 140-ish, okay? So that's kind of what I'm seeing for right now. I'm expecting if we don't get a strong reaction today, the bottom will probably come in tomorrow on Friday. But we'll see kind of how we get down into the 62 level, where if there's any sort of a bounce to be had there, okay? So that's what I'm seeing as far as the liquidity map goes. Again, using trading different here. This is my absolute favorite tool for looking at liquidity. And if you guys want 10% off, feel free to use my code down here. It's tradingdifferent.com/code/Sean. So feel free to use that. You'll get 10% off of the tool. Again, highly recommend it over Bookmap, over Bull Vision, any other tools that you guys have seen in the game here. So let's go ahead and take a look at the simple map here. Um, So the simple map showing the scalping trades. So basically there are 100x, 50x, and a little bit lower than that. Um, you can see we don't have as much 100x, to the downside. We do have a ton of 50x, which is a decent amount to be able to take out. So we could really take a lot of this out. Even this kind of alludes to taking it out to the 62, 140-ish level right here. A lot of this concentrated liquidity, that's 50x. Same with we have quite a bit of 25x. Mostly 10x is going to be once you get to the 60 range. We do have a little bit of 100x here, but one thing that is a positive to the upside is we do have more 100x to the upside, so there's a lot more people trying to short the market for right now. We don't have as much 50x concentrated liquidity, and it does look like there were some, people that were shorting that did take profit, at least when it came to the 25x and the 10x. There's more concentrated liquidity, below us, unfortunately, for now. So this does tell us the same thing, that there's probability-wise we are going to continue heading down for right now. Um, Looking at, our swing trade environment, this is, honestly more of a positive, I would say, than the scalping environment. There is a lot more 25x and 10x liquidity to the upside. So on our 4 hour, our daily time frame, there is starting to build up more to the upside than there is to the downside. The only thing that the downside really has for it for right now is, we have most of our 5x and 3x there. But there is, like I said, a bridge potentially to get us back up with the 25x and the 10x, it looks like. So that is a really good sign as far as that goes. But for right now, guys, I've been trying to keep an open mind, not really have a bias. I am so far leaning more bearish. I gave the Bulls a chance last night to show themselves, to stay above that 64.4 level, and they didn't. So I have to lean more bearish for now until we can get a stronger bounce. Now, when it comes to our order book through Kiyotaka, free tool, you guys can just sign up for it using a Google account or, by using your email. Um, this is showing that more than likely we're going to start heading to these orders down to 62, that 62 140 area, right? There's a lot more concentrated liquidity right here. We have one order up at 64 800 it looks like, which would technically take out this kind of this double top right here. So, that is to be, that could potentially be visited this week if we could get a bounce sooner rather than later. I'm not thinking that we're going to get up here though. Again, that would still be below the 65.6 level, so we could still chop around up here more between 63 and 64. Keep an open mind with that. Um, but, again, I'm not expecting us to get too much higher this week. I'm expecting us to keep going lower, making our bottom potentially on Friday, and then having some sort of bounce and chopping around until the following week. Anyways, guys, that is what's to be expected today. Sorry that this was a long video, but I wanted to go over the whole double top, double bottom, concept, as well as weekly opens and why I put so much weight on them. So I hope you guys enjoyed this video. Take care, and I will talk to you later on this afternoon. Talk to you later.